You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Before we get to the pitches, we have one of my portfolio's companies who's been through seed, A, B, and building an incredible lending, unique product called Apple Pie Capital. And Jeff Zinn runs their capital markets, so he can give you a feel for what it's like to get to this level and what they do.
Thank you.
Okay, good to see you.
All right. Thanks, everyone, for being here. Thanks, Howard and the Stocktwits team. My name's Jeff Zinn, as Howard said. I head capital markets for Apple Pie Capital. And we're a Fintech company. We're an alternative lender. And what we're focused on is making loans to franchisees. We lend into the franchise space. And I'm going to talk briefly about the company and the franchise space here. So we started lending, as you can see here, at the beginning of 2015. The company's been in business prior to that. That was set up and infrastructure. We've lent out over $50 million of loans life to date. We have 40 brand partners, and I'm going to talk about that in a moment. We get all our leads and borrowers from our brand partners. We've made over 100 loans. We're about to close on $180 million of an institutional debt facility, which is going to be a major inflection point in the business. It's going to give us a ton of capital to make great loans to great brands and expand the business. And there's a lot of data here. I'll let you absorb it. Ready? Okay. And as you can see on the next slide here, October's been a big month for us. We've got, as I said, 40 brand partners to date. They've got a ton of demand, $700 million of demand. And our portfolio is right now 30 brands across 28 states. Howard mentioned some of our capital raising history. We're closing this month our B round, $15 million, post-money $60. You can see some of the names there. We're really proud to have these investors who've stayed with us. We've added Fifth Third Bank to the roster, which is a great strategic investor for us. So we're really excited with the growth of the investor base and the valuations that we're getting here in this space. Let's talk a little bit just about the business. The franchise industry is just a gigantic industry, and it creates so much wealth for so many people. And we think we can be a real active part of that. And this chart shows basically just how adding brands and adding depth to those brands is going to drive revenues and volumes here. So we think we're participating in a gigantic industry. It's 3% of the U.S. GDP. A lot of people didn't know that. It grows very quickly, up 33% since 2010. And there's a ton of demand for capital. And I think one of the common threads that we've heard today from our panelists is that the banks just aren't doing what they used to do. And they certainly aren't doing it the way that borrowers need them to do. So what we're able to do is we're able to lend to franchisees where a bank just can't, or the government through the SBA program just can't do it efficiently. So it's an alternative source of financing for an industry that's huge, but also is hungry for capital. The way we do what we do is we really start with the brand. So we think the most important thing is to find a good brand partner, a healthy ecosystem, that they treat their franchisees well, the franchisees can grow and make money, they have good products, good training, good site location. When you start with a good brand, you end up getting good borrowers. When you get good borrowers, you get good loans. So starting with a brand and screening for brands is something that we've applied a lot of science and a lot of technology to back testing and to screening, and we have a lot of information and science around how we get our brand partners. And that filters down to what we can offer our investors, both direct to institution, or to many folks in this room today buy our loans on the marketplace. And you're welcome to buy more because we love making them. So that process that we've spelled out here really shows a little bit about how we start at the brand and end up with a very high quality product that we can offer to you. And again, and many of the folks here, like I said, do this. When you invest in our loans, you're getting a really interesting cross-section, both of sectors, obviously different brands, and we're always expanding our brands. Geographies, we lend in all 50 states. We've got 28 states represented now. And we have all different types of loan types. We've got people buying their first unit ever. We've got people buying their 10th unit. We've got people very experienced buying an existing group of units. So there's a whole bunch of different types of loans that come out of this process. And here's a really colorful and happy picture of just some of our brands. And some of these, I heard some women out on the beach talking about Orange Theory. It's a big brand here. That's something we're doing a lot of. Jersey Mike's, Phoenix Salons. Many of these you've heard of. 7-Eleven, I'm sure everyone's heard of. Crunch Fitness, Dunkin'. These are our brand partners, and this is really the driving force that grows our business. And it's a little snapshot of that. So when you talk about our loans, I think what I've touched on is we're really looking for that sweet spot. And when you do things right, here's what we come up with. We come up with a loan. We're lending money, roughly 7-year money. Some of it's 5, some of it's 7. What we've done to date is roughly 8 5/8 of lending. Our average loan is $400,000. You can buy as little as $1,000 or $2,000 on the website. Our borrowers have a lot of equity in the business. They put in roughly 28% of the equity themselves. They're very high quality FICO borrowers, 750. All the loans are personally guaranteed by the borrowers and have a UCC-1 filed. We're dealing with folks that are responsible adults about their fiscal life with good DTIs, like I said, good FICOs. And the businesses themselves should function well with 2.0 debt service numbers and EBITDA coverage numbers that just make sense to anyone who lends money. That asset coverage number is pretty interesting. Our average borrower has $2 million of net worth. And I think that's interesting. I think it speaks to kind of the sector that we've touched on. And it really points to the fact that there is a shortage of capital for this space. So this is this is a snapshot of the portfolio. This is the cross-section of the portfolio. If you were to assemble a package of loans with us, you'd have something that looks very consistent with that. And here's a current offering actually in our marketplace, and you can see we've got a Brooklyn-based unit of Orange Theory, which is a brand we've all hopefully heard of. And we give some of the stats about the business, and you can go ahead and purchase a fraction of this loan right on the marketplace today. Okay, so like I said, there are a couple different ways to participate. Marketplace, $2,500 minimum. If you do an automated plan, and many folks come to us and say, "Hey, here's 10, here's 50, here's $100 grand. Just put me into the loans as they come out." That's automatic investment. Standby purchase is another way that folks in this room here participate. That's a little bit of a more direct, almost mini institutional. And then, of course, what's going to really drive the growth and the value expansion is the whole loan business, and that's we're getting really great sponsorship there. It's going to feed back and allow us to offer more and new and exciting things in the marketplace. So it's really an exciting kind of dynamic. They're fixed income assets. They pay interest. They pay principal every month. You all probably pay taxes. One great way to invest in this asset and not have to pay taxes on the income is to use an IRA. We've set up with New Directions IRA, and we're really happy to help anybody who wants to open an IRA with us and invest through the IRA. So that's another way of participating in fractionals. Come to me or let me know if this is something that might interest you. I'm happy to help with it. We've got a lot of growth in this area. And here's the equity. So like I said, we raised $15 million on a 45 pre-money. We have a strategic bank participating. We've got a lot of capital coming down. And we've got just a little bit left, and we're about done on it. This is Denise's area. So if this area interests you at all, speak to me and I can refer you to Denise. I think she's putting the finishing touches on that green space, but I'm happy to connect anyone who wants to talk to us more about that. And this is the bios. A lot of different companies that we worked at before. Pretty impressive. And I'm pressing the wrong button. And how did I do? 10 minutes on the nose. Thank you. Thank you, everyone. Appreciate it.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.